Hello everyone and welcome to today's major markets update for November 18, 2022. Thank God it is a Friday and let's have a look at the charts to see where we are, because when the evidence changes, we change accordingly, and we want to make sure that we are always as much as possible on the right side of the trade. To help you with that, we have Jesse Livermore's 21 trading rules. And please remember, rule number 1, minimize your loss. Rule number 2, use stop losses. Rule number 3, maximize your profits. Nowhere does it say that rule number 1 is about maximizing your profits. You need to protect your hard-earned money, and that's all the name of the game, and the rest will come to you. So please remember, there are many ways for you to go about. Do it yourself, etc., etc., etc. I'm here to help. I'm not here to take the money out of your pocket. It's a win-win. If it's a win for you, it's a win for me, and vice versa. It should never be ever a loss anywhere, and of course not a losing trades either. We hate them, but they're price of admission we need to pay to play this game. Everybody has losing trades. Those that do not have losing trades are liars. As they say, there are two types of surfers, those that pee in their wetsuit and those that lie about it. And that sums it up. Same for trading. And so let's go to the charts. We have the Dow Jones. The Dow Jones is right there on the cusp of breaking higher. It did get above last Thursday's high, so we could see another push higher for this red wave 5. It wouldn't surprise me if that's the case on more negative divergence. Maybe an ending diagonal before we see the roll over for black wave B2. Now, please remember that Dow Jones could still try for this last fifth wave higher to about 40,000, 41,000. It's still possible. Okay, the weekly chart, this is the weekly chart, does look reasonably bullish with price now back above the 50-week moving average. It is holding the 200-week moving average, which is pretty much the delineator between a long-term bull market and a long-term bear market. So this one can still go to 40,000. Okay, it is still very possible. Now the NYA, which is also a broad index, does suggest that it has topped. If I use here the monthly candles, we can have a wave 1-2 from the March 2020 low, a 1-2 in red, another 3-4 in red, another 3-4 in red, and then the wave 5. It means we're now in a bounce that should target around 16,000. Okay, this one is still above all its moving averages as well. It's still within the long-term trend, as you can see, that started here in 2009. But from the March 2020 low, this counts reasonably well, if not pretty well, on a monthly closing basis as 5 waves higher of that infamous low, and now working on our ABC with wave C here ultimately down to around 11,000. Okay, so note that we have the potential for fifth wave higher in the Dow Jones. NYA doesn't have to necessarily do it. Similarly for the small caps. The small caps have also technically done enough waves up since the March 2020 low. That was a very significant low, either a cycle 4, depending on which index you look at, in this case the small caps, or a primary 4. It was an important fourth wave low. Since this high here in early 2018, we have a clear ABC zigzag lower, and then rather clear, clean impulse higher for the small caps. This is the S&P 600. Wave 1, wave 2, counting a down wave or down month as a corrective wave. Then a rocket wave higher, as you can see, only up, 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 up. For wave 3, right here at the 161.8% extension at 1410, classic third wave target. Then a wave 4 that is ideally going to the 100% extension at 1183. But the retrace zone for a fourth wave is between 23.6 and 38.2% of the third wave. And as you can see here, right where my cursor is, the fourth wave bottomed right in this ideal target zone. So nothing out of the ordinary. It hit this trend line, and then we got a stab into the ideal fifth wave target zone. So we have enough waves in place to consider this whole rally since the March 2020 low complete. Now, some might suggest this is a wave 1 and we're now in a wave 2, and then 3, 4, and 5 are still to come. If that is the case, it will be a massive, massive third of a third wave that will make this rally here in, I would say, late 2020 into 2021 look pale in comparison. I don't think so. That'd be something unbelievable. But who knows? Crazier things have happened. That is my very, very last alternative. So I'm not going to bet on it. Moving on to the NASDAQ 100. Well, obviously it did two things compared to yesterday. Jack and you know what, up 0.00%. So we can still try for this squeezy last fifth wave, the green arrow, to about 12,200, maybe even 12,600. And then we roll over for wave B, or we have already completed wave A. You can really see how this index is trying to hold the 11,650 level. That's this first bearish cutoff. That was the high made here in late October. It's unbelievable how accurate this is. So clearly we go below Thursday's low, then I am pretty much in the camp that this wave B is underway. We break back above the 11,950 level. Again, the bearish cutoff that we broke above on Tuesday, but didn't hold. Then we can target 12,200 to 12,600 with the lower end preferred. Things do start a little toppy, but price is the final arbiter, and it is holding this 11,650 level. That we need to break below on a closing basis. We didn't do it yesterday, don't do it today. So the market is in a holding pattern and leaving us all guessing. Below it, and below, of course, Thursday's low, wave B underway. Above it, we can still try for another fifth wave higher. Then this little Monday dip was part of wave 3 and not green wave 4. And then I simply move the chart label to here. Okay, that's simply where we still are arguing about. How about the semiconductors? Well, deal today was not very convincing. Candle still needs to break above 12,775-ish to target the 2950 plus or minus 50. Still possible. We need to see it. I'm not convinced yet it's going to happen, but I don't see any sell signals. That needs to happen below 2630. We held that yesterday at 2633, I believe it was. So below it, and then wave B is underway. Absolutely. That is my preferred view. We've done technically enough. But we keep rising, then we know our upside target. Okay, so the easy part is done. It's simply a matter of this last fifth wave, yes or no. How about the S&P 500? Same deal. Today was a doji candle. Doesn't tell me anything. Below, I would say 3860, and we can target into the 3750 plus or minus 50 for this black wave B. That's the cutoff. You can see it loud and clear. We're back in the noise zone, the blue box. We almost nicely made downside target on symmetry yesterday, but we do need to clear, of course, last Friday's high. Let me show you that one. This is, of course, now, let me do the horizontal line. We need to break back above this one, okay, this level here, which is about 39.92. I'd like to see that. If we can get above 39.92, then I'm in the camp for this last run to about 4100. Let's say make it 4125 plus or minus 25. So again, we have enough scribbles in place. I'm going to take the symmetry boxes away there for this blue wave 5 there. This should be the blue wave 5 target zone. And I'm going to make this one blue as well. So we simply know what is going to happen. And of course, below yesterday's low really opens the door for this B wave underway. We'll know soon enough. That is the unfortunate path we're in. Why? Because we kind of have been sideways all week. On Monday we dropped, on Tuesday we rallied, then we dropped for 2 days, and now we're kind of back to where we were on Monday. It's not too much to say, not too much to say about this week in that sense. So technically we've done enough, 1, 2, 3, 4, 5. but we can still have some sort of more complex wave 4 and still in this wave 5, again below the cutoff, which is at about 3860. And I'm looking for this B wave low from 3750 to 3700, above 3992, and we can target 4100 to 4150. All right, not too difficult. That's the two things we're looking for. So we have our triggers. Now here is the weekly chart of the S&P 500. I wanted to show it because we have, of course, this entire impulse since the March 2020 low to content ourselves with. First, let's zoom out a little bit to the past. We can see here a little bit more, I think, there, if we can find it. We have, of course, our primary 3 wave in January 2018. Then we have a wave, a B wave, and a C wave, or a WXY, whatever you want to call it. Again, a Y wave can be 5, can also be 3. It doesn't have to be anything as long as it's a connector wave. This is 3 waves lower for A, 3 waves higher for B into February 2020. Clear 5 waves lower for wave C. So potentially we have a WXY of a WXY. Very complex pattern. Primary 4 here, March 2020. And then we have a nice impulse here, a drop, impulse here, and a drop, etc. And you can see here how this black wave 3 topped right inside the ideal Fibonacci-based extension between 138.2 and 161.8. Wave 4 fell a little bit shy of the ideal wave 4 target zone. It's fine. I think we came within about 10 points, so beggars can't be choosers. And then you can see how this wave 5 or 5 or 5 or 3 topped right in the ideal wave 5 target zone as well. Since then, we've been going correctively lower, ABC, ABC, with this last wave lower doing 5 waves, 1, 2, 3, 4, 5. Now, the ideal wave 5 target zone was 3270, 3370, and the ideal CSA target was about 3150. Now, we didn't reach it, okay? That's okay, it happens. These are our roadmaps, and we adjust accordingly. When the evidence changes, we change accordingly. We already knew once we broke above this wave 4 high that we would go higher. So we should now be in this larger B wave, as I penciled in a while ago, but of course this B wave is now going on from higher levels. So we can simply move things higher. So this is then wave A, as you can see, not too bad. We should then get wave B, as we've seen here on the daily chart, A, B, C, okay? And then this one. Now, since we've moved higher, we also need to move the B wave higher. Again, a little bit disappointing that we didn't get there all the way, but it is what it is. So we have wave 3 right there, wave 4 right there. This target zone wasn't reached, failed a little bit, wave 5, and then this should be A. Now we can then simply adjust our B wave target zones. When the evidence changes, we change accordingly. We start off with our initial assessment based on the data available, and when that changes, we change accordingly. So we've now already done a 38.2% retrace. Okay, that is technically enough for a B wave. So the B wave could be considered complete. But are there other pieces of information that we can find to suggest that this B wave is not complete? Well, first off, let's start with, and then we get, of course, wave C. This black B wave here, okay? It topped here in the ideal target zone. And let's have a look how long this B wave took. This is the time box, as you can see here in gray. Now let's add another time box to it, because we should now be dealing with a primary blue B wave, which is 1 degree higher than the black B wave here. So we should then last a lot longer, okay, as you can see. It's logical to assume 1 degree higher will last to double as long, which easily gets us into early 2023, the spring of 2023, the end of the winter of 2023. So this should then be wave A. This is not to time, this is just simply to show the path. And then of course wave C. Again, B waves are ideally zigzags. They don't have to be. They can also be a flat or a triangle. But we start off with the zigzag because that one is just the easiest to assess. Let's hope we get it all saved. So timing-wise, it suggests this blue B wave is not complete yet. Okay, timing-wise. It is the same, of course, with if we are going to look at, let me see if I can find it for you. There's a lot of charts, of course, to look for. If I can find the seasonality chart for you. Let me pull it up. Seasonality 3, there we go. No, I don't want to print it. There. I'm going to zoom in. So we are now mid-November, and we should be in our way for a decline into later into November. This is all, of course, plus or minus. Just as we didn't bottom late October, but mid-October, October 13th, it doesn't mean we have to, of course, bottom late November. So we could have this all move a little bit plus or minus. This is all averages, but it gives us the general trend to look for. So that's what we're going to look for. If we bottomed earlier, we might, for example, top earlier or later. It doesn't have to be always the same. But this is what we're still looking for. All right, that's the preferred path, which would take a lot longer than, of course, the June-August rally. That was 2 months, so it's easy to think that it's going to last 4 to 6 months. So here we then have the IWM. So far, so good. Looks like we have wave A potentially complete, wave B, and now wave C. Still looks good. I see no reason to change my tune unless we start making higher highs again. Okay, so that looks all reasonably well. So we have our levels to watch. In essence, below to yesterday's low, Thursday's low, and I'm in the camp of the larger B/2. We should know soon enough. Dow Jones can still make a new all-time high to around 40,000 plus or minus 1,000. The NYA should be in a B wave. There's enough waves up since the March 2020 low to consider the impulse complete. Similarly for the small caps that have done really nice Fibonacci-based ping pong, listening to all the right Fibonacci extensions and retraces. So picture perfect. Tech sector can still try a little bit higher, 12,200, 12,600. It is holding the 11,650 level loud and clear. We closed at 11,677, pretty much the same close as yesterday. Unbelievable. We need to break above, let's see here, 11,900 to suggest that we can go to 12,200 plus. Similarly for the semiconductors, above 27.75, and we can target 29.50 plus or minus 25. Below 26.30, 26.33, which is yesterday's low, then the wave B should be on our way. Similarly for the S&P 500, below 38.60, and we should target 37.50, 3700, and above 39.92, all on a closing basis, and we can target 4100, 4150. Okay, last but not least, the weekly chart also suggests that we are in a larger bounce. So far, only 3 waves up into this week's high. The previous bounce lasted 2 months, so it's quite normal to think that the current bounce, which is 1 degree higher, will last at least double as long, 4 months at least. Can last a lot longer, don't know yet, I'm not a timer, but it gives us an idea of why most likely this bounce is not complete yet. And then we simply don't know how this B wave is going to unfold. I'm tracking here a simple zigzag A, B, C, where the B wave retraces about 50% on average of the A wave before wave C starts. We can get a flat where the black wave B will go below the start of the A wave. Many things are still possible. All right, so this is still a bear market and should be treated accordingly. Small position size, sell quicker, tighter stops, all that good stuff. There's still plenty of money to be made. Just don't be greedy, and to always trade safely. Always have a stop in place and take your losses if necessary. And if you have profits, green is gone. That's the rule. Take care, trade safe, and I'll see you all on Wednesday Monday, Tuesday will be our regular written updates. Take care and have a great weekend. Bye.